Hey everyone, welcome back to Corporate Decoder. Today we are diving into a company that might need a life raft after seeing these numbers. But before we jump in, if you appreciate getting straight insights from corporate documents, make sure you are subscribed and join our Discord community for more discussions. The link is in the description. Today we are looking at Gulf Island Fabrication's recent report. The big story here is how they are doing financially. We will look at some key numbers and what they mean for the company. First off, this report is what's called an 8K filing. Companies use these to quickly share important news with investors. In this case, Gulf Island Fabrication is announcing their first quarter results for 2025. Keep in mind that while they sent out a press release, the company wants to make it clear that just because they issued this document, that doesn't automatically mean it's legally responsible if someone relies on it. Basically, unless they specifically say it's filed under certain laws, or if they include it in another official filing, it's not held to the same legal standard. Gulf Island Fabrication is traded on the Nasdaq Stock Exchange under the ticker symbol GUIFI. Now let's dive into the numbers. We will go to the exhibit section to see the press release that contains the financial information. This press release contains all the details about their first quarter results. Let's find out how they did. Okay, here is the financial data right off the bat. Let's look at revenue. In the first quarter of 2025, total revenue was about $24 million. That's down from about $30 million in the same quarter of the year before. So they made about $6 million less than they did last year during the same period. Gross profit, that is the money left over after subtracting the cost of what they sold, was actually a loss of about $900,000. Last year they had a gross profit of around $2 million. So not only did they not make a profit, they lost money on the sales. The net loss, which is the bottom line profit or loss for the company, was almost $4 million. This is significantly worse than the loss of about $700,000 in the same period last year. This means their losses increased by a lot. Let's examine the balance sheet, which provides a snapshot of what the company owns and owes. Looking at their cash and cash equivalents, they have about $3.6 million. At the end of last year, they had around $7 million. So their cash position decreased by more than 50% in just one quarter. Now, let's look at liabilities, what they owe. Total current liabilities are about $61 million. This is a big number, especially when compared to their cash. Total stockholders' equity, which is the value of the company owned by the shareholders, is negative $13.6 million. This means the company owes more than it owns. The company mentions their backlog, which represents the total dollar amount of work that has not yet been completed. They state that their backlog as of March 31, $115, $100, 115 Tom 5th, was $115.29 million. This is a slight decrease compared to December 31, 2024, when it was 12 for US business stat guarantee future profitability, especially if the company is losing money on current projects. Now let's dive into what management is saying about these results. This section gives us insight into how the company sees its current situation and future plans. Management admits that the first quarter results were not good. They mention challenges in completing projects and getting new work. They also talk about needing more money and are looking at different ways to get it, including selling assets, which means the company might sell some of its property or equipment to raise cash. The company says it might not have enough money to keep operating for the next year. They talk about needing more funds and the risk that they might not get them. This is a big warning sign. The company mentions that they are involved in some legal issues, including a dispute with a customer and an ongoing issue with the IRS. They confirm they don't have any off-balance sheet arrangements, which are ways companies can hide debt. After the quarter ended, the company entered into an agreement to sell some equipment for $4.3 million. They plan to use this money to pay off debt. Now, putting this all together, Gulf Island Fabrication is facing significant financial challenges. Their revenue is down, they're losing money, their cash is dwindling, and they have a lot of debt. The management is aware of these problems and is trying to find solutions, but they also admit that they might not be successful. One of the biggest risks is the going concern warning, which means there is substantial doubt that the company can continue operating for the next year. The numbers paint a clear picture: a decrease in revenue, a significant net loss, dwindling cash reserves, and a negative stockholders' equity. All this means Gulf Island Fabrication is in a tough spot and might not be able to continue as it is. Alright, that's our breakdown of Gulf Island Fabrication's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.